Good morning, everybody. Mike Vacchi, Princetontrader here for Mr. Topstep with your Monday morning pre-market webcast. Hope everybody had a great weekend. Daily chart of the ES, and the first thing I want everybody to notice is that we are outside of the Bollinger Bands. Now, take this with a grain of salt because, they were pinched pretty tight here, but at the same time, we're outside of two standard deviations here, and we have been now for almost two sessions. So you've really got to expect some kind of a pullback. And I'm not saying, we're going to pull back right here on this number, but as far as risk reward goes, being completely outside of the Bollinger Bands, your risk is to the upside. And if you're a trader, if you're a day trader or a swing trader, you have to be looking at short positions in here. Be cautious, but you've got a very nice risk marker here at 1438.75. We're trading up at 1435.75. They may run up and try to test the highs, maybe even make new highs this morning. But as they do that, you've really got to keep in mind the big picture, which is that we are extended with respect to the Bollinger Bands, and I would expect the market to pull back inside the bands. So then the question becomes, if we pull inside the bands, where are we headed? So here's a 15-minute chart of the ES, and what you can see here, you got the daily pivot today, 1435.83. You can get the pivots; they're up on the Topstep website. They'll be on the front page of the website, or you can click on my name under the contributor to go to my contributor page on Topstep, and all of my posts are there, and you can get the pivots that way. They're up every morning between 7 and 7:30. So you got the daily pivot here, which is trying to be resistance at this point. So that's one thing. Secondly, we've got triple pivots down here from 1423 to 1424.75. So things are tending to bunch in that area. If we start to head down lower, there's really not much that says it's completely out of the realm of reality to kind of do a 10-handle rule down to this triple pivot area. If we do get down to this triple pivot area and we start to see some support, that's a good place to exit a day short and maybe try a day long for a little bit of a bounce back, because I really think that there's going to be some kind of a bid underneath this market until the Fed meets in September, because the Friday jobs number was absolutely horrible. There's nothing positive about it. You had the unemployment rate drop 0.2% because of people leaving the labor force in droves. You had 96,000 on the headline number that was diminished by, the reality of that number was propped up by birth, death, and a number of other factors. So the reality is we're really not creating jobs at all, and nobody sees that better than the Fed. So then the issue becomes, now it feels like the market up at the 1440 level, this market is presuming active intervention at the next meeting. Okay? That's not the same old statement coming out, changing a couple of commas. That's active intervention. This market is starting to demand a plan from Bernanke. So keep that in mind as we get closer to the meeting and see if that turns out to be reality. If the market doesn't get what they want, then maybe the bears, and I'm one of them. Maybe then we get that little deeper pullback that everybody has been looking for. So let's do support and resistance real quick. Okay, so on the upside, you've got the daily pivot 1435.83, then the swing high 1438.75. Above that, 1443, 1447.5, 1453. On the downside, 1432, 1427. Then triple pivot zone from 1424.75 to 1423, 1417.63, 1412, 1411.58, and 1408. So this is Mike Vacchi, Princetontrader for Mr. Topstep. Trading well, everybody. I'll see you tomorrow morning with another webcast.